This is Tom Cloud with my bi-monthly precious metals market update. This week I was sent a video with Ross Perot debating George Bush Sr. and Bill Clinton for the presidency. And the argument was about the debt. We had just hit $1 trillion. Remember, we're just talking about going back to 1988. We just hit $1 trillion. Since 1988 till today, $33 trillion of debt. And Perot was complaining like crazy. And he was basically saying that they weren't businessmen, Clinton and Bush, and that they didn't realize what they had gotten themselves into. They couldn't continue to print money and print wealth. And they kept attacking him, and he kept attacking back, saying, if you don't do it, this is what's going to happen. And sure enough, we watched the debt go from $1 trillion to $33 trillion. And then the interest on the debt through September 30th, 2023 for the fiscal year, we had $897 billion just in interest. Just in interest. It's right at 3% of $33 trillion. And here we see everything's inverted, everything's crazy. You could give money to treasuries right now for 2 years and make 1.5% more than if you get a 10-year treasury, which is an inverted curve. It's crazy that we're in that bad a shape, and we had to beg people to buy our debt. And you do that by raising rates on the short-term instruments where they're not tying their money up for 20 or 10, 20 or 30 years in the U.S. bond market. So it's watch, but just to think where we are today, where's $33 trillion going to? All we see is Congress and Senate get together, and they always raise the debt ceiling. The alternative is to go out of business. They're not going to do that. So they argue and fight a little bit and get a little bit of this and that. But the bottom line is we're headed toward a cliff of no return. The United States will lose. It will lose its place in the world where we stand today politically. So the thing gets worse. So I'm predicting, as are many people, a catastrophic 2024, and the Federal Reserve is going to have a nightmare like they've never had before. They're going to have to come in and raise rates again, or we're going to have inflation continue to pick up. And the joke about inflation with Biden saying he's got inflation under control, he runs it from 1.5% to 7%. Then it comes from 7 down to 5 based on a 1 month indices. And we're sitting here, he's got inflation under control. It's still 2.5 times what it was 2 years ago, the rate of inflation. And this will be the big culprit next year. You will see that, and you will see maybe an inflationary recession, or if it lasts 2 or 3 quarters, it'll be an inflationary depression. You've got to get into gold. If you don't have gold, if you don't have as much as you want, you've got to get into it. Whether you put it in your IRA or whether you put it personally and take delivery or have it stored at the cheapest storage rates in the world that we have negotiated for you. And I mean in the world, it's not exaggerated. We have the lowest storage rate in the world for you larger or those that don't feel comfortable holding their metals at home. The other thing we strongly recommend is if you don't have an IRA, gold is to take especially your baby boomers that are retiring and coming out, get you 2 self-directed IRAs, one for precious metals and one for stocks, bonds, and treasuries. And then that way you can move them back and forth as you see things changing. But don't leave it all in a stock and bond. There's no diversification. Just look the last 2 years. Gold continues to be the investment. And because of Basel III, we've talked about many times on this show, central banks now buying gold at an unprecedented rate. But this week, we had a little shocker when Russia and China did a $5 billion exchange and didn't use the dollar. They used the euro. And this is amazing. This is going to become the norm. So you want to get your IRA fixed, and we'll work with you on what percentage you want in gold, what percentage in silver, which product you want, coins or bars, and Dan will discuss all that with you. So it's a real exciting time, but you've got to be on the right side of this trade. And gold is going to be the right side of this. It has been this year and last year, and it will particularly be next year, with it being an election year coming in there. So what I advise you to do is keep reading, keep looking at all the possibilities that you have, but keep your eye on the U.S. dollar. Keep your eye on the U.S. dollar. We've watched it go from 123 down to 105, 103 this morning. And it's coming down, and once it breaks below 100, it's going to pick up what we've talked about many times. Every 1% it goes down, the gold is going to go up between 2 and 3%. And you're going to see that happen next year, and I think even in the first quarter of 2024. So anyway, I wish you all a happy Thanksgiving, a blessed Thanksgiving, and certainly we're going into the Christmas season, and we know the reason for the season, and we thank you for what he's done for all of us. And we just say from Dan and Catherine and Tripp, my grandson, who's doing a lot of work. He's a senior in college, and hopefully y'all be meeting Tripp along the way. With this Precious Metals Market Update, this is Tom Cloud signing out.